So the Dow was earlier made of muscle. The S&P and NASDAQ, well, they've been atrophying most of the session here. The S&P hasn't even been in the positive today. Right now, it's down 48 points. The NASDAQ is lower by 301. Low of the session, 329 points of losses. And two magnificent moguls are really more like pre-Halloween monsters right now. Meta is getting kneecapped at the moment. Let's look at Meta. It is down right now 11.5%. Investors do not care that the Facebook parent posted a double beat and ad business grew at such a torrid pace. But investors are fleeing due to the ocean of cash Meta plans to spend on AI that, I guess, to some investors is a little too reminiscent of the metaverse days when CEO Mark Zuckerberg dove into an untested technology that failed to eventually take root. So Meta right now stands at $668 and change, well off the session low of 650, but still not too pretty here. By the way, the stock is pushed now into the red quarter to date. I'll flip it over to Microsoft. So Microsoft's in the red as well, but this one's a little less frightening. It's down 3.33%. It did beat quarterly estimates, and its Azure cloud revenue surged 40%. The chief financial officer cited Azure's capacity shortfall, but said that's just due to hot demand stretching cloud infrastructure to the limit. So Microsoft, in a way, is getting a little bit more of a pass here. Totally conversely, Alphabet is spiking to a record right now. We've got Alphabet up 3.25%. Again, off the highs of the session, but still looking good here. The Google parent handily beat earnings. Ad revenue gained 14%. Cloud sales up 33%. Now, two more magnificent seven names step up to the plate after the bell. We're talking about Apple and Amazon. They both report quarterly numbers. Apple hitting a record high. We've got it up about 0.2%. It's at 271 and change. Amazon is down 2% at the moment to 225 and change. So, yes, those are critical names, but make no mistake, business leaders were hanging on to the outcome of trade talks just completed by President Trump and Chinese leader Xi Jinping, which President Trump described as, quote, amazing. According to the White House, China has agreed to pause its export controls on rare earth minerals. The U.S., in turn, trimmed fentanyl tariffs down to 10% on China. And China has agreed to immediately purchase 12 million tons of American soybeans till the end of this year and 75 million tons over the next 3 years. In a Fox Business exclusive, Goldman Sachs CEO David Solomon sat down with me today to give his first reaction to the trade deal and more. David, thanks for joining us.
Thank you.
Really
Delighted to be with you this morning. Thank you.
So we have a decompression of trade tensions for the moment. From what you know about the trade deal that the president and Xi Jinping just struck, what's your gut reaction to that?
Well, I don't know a lot, but I watched the news, this morning, and it's clear they had a constructive conversation. These are the two largest economies in the world, and it's very important that we get to a more constructive place than we've been over the course of the last couple of months. I'm encouraged about what I heard, on the news this morning coming out of it, but I'll look to get more details and understand. But a de-escalation, I think, is really quite positive.
You have spent a fair amount of time in your entire career in China, visiting constantly, doing business there. Are you a free market guy who feels that, listen, we're the two biggest economies here. We should just have at it in a positive way and clear the channels and start trading?
I don't think it's that simple. I mean, it is the biggest economy and it's intertwined with our economy, and I'm not a believer that there's going to be a significant decoupling. But we have to have a system of rules and reciprocal agreements that are fair, that are level. We haven't had that. There are a bunch of things strategically and from a national security perspective that are very important to the United States, and we have to make sure that our relationship with the Chinese around those is clear and appropriate, and it hasn't always been. And so, the policy of the last 50 years, let's just participate and it will all be fine, that's been a mistake. And, I think what the administration's doing to try to get clarity on a bunch of these things, I think, is important. But ultimately, we have to get to a place where the economies can, around a number of things, interact appropriately. And I hope we're making progress.
Billions of dollars are coming in from the tariffs. Of course, those are paid by importers here in the United States. But what value do you see in the tariffs?
Well, I think the administration's using the tariffs as a negotiating tool to help set trade policy. And I think if you step back, one of the things that's important to recognize is there have always been trade barriers and trade tensions in all our trading relationships. That's not a bug of the system, that is the system. And I think one of the things that administrations have to do is they have to get at that stuff. And a little bit of disruption to get at that stuff and try to get those things to a better place, I think is helpful. Now, one of the things that's helpful for business is to understand what the road's going to look like going forward so that you can make investments, you can get your supply chain set up the right way. And we're at a moment in time where there's been less uncertainty around that, but hopefully, the end result will be constructive in a way that businesses can invest, be competitive. We need national champions here in the United States, and I think that's something the president's focused on.
You're meeting with your 10,000 business members here at the summit, several thousand of them. The small businesses are the ones that are getting hurt by the tariffs. I spoke to one of them. She told me she's got a market cap of about $1 billion. She's not publicly traded, but
not such a small business.
True, but she started with nothing.
Yes.
And she said she's already written $21 million in tariff checks. That just doesn't come out of nowhere. She's getting crushed here. What are you hearing from these small businesses?
Well, I will answer your question, but I want to step back for a moment. I want to thank you for being here at our 10,000 Small Business Summit and spending time with us today with these 2,000 businesses that are here. They add jobs at 4 times the pace of businesses that don't go through the program. And so 35% of the private workforce in the United States is in small businesses, and supporting this community and the entrepreneurship is hugely important to the U.S. I think you're right that there is pressure, at the moment on small businesses coming from a number of fronts. And there's no question that as supply chains shift and some of the pricing is put forward, it has an effect, but there are also counterbalances. One of the things that I think is really positive is we're in an environment where there's more focus on regulation. And regulation should not inhibit small businesses from being able to invest and grow. And so we're getting some tailwinds from that. I also think one of the things I'm taking away from small businesses here today is they need better access to capital.
Stock market has clocked many records recently. We're very close to record highs. I mean, when you look at this bull market cycle, how long do you see it lasting?
Well, it can go on for quite a while. I'd point you back to Alan Greenspan's very famous speech in the fall of 1996 about irrational exuberance in stock markets. That was around the development of the internet as a technology. And at the time, the NASDAQ was 1,300. The NASDAQ didn't peak for 3.5 years at over 5,000. Now, I'm not saying, it's the exact same analogy, but this technology and the expansion of this technology and the capital formation around it is a very powerful force. It's very exciting. There will be winners and losers. When I look at public market valuations, the tech valuations are high, but they're kind of 75th, 80th percentile, not 95th percentile. The rest of the market does not look, as exuberant as the tech space does, but the growth and the productivity gains that can come from this technology being deployed in the enterprise, the market's embracing the forward. And I'm sure it won't go in the straight line the market's currently expecting. And we'll get some point in the future, we'll see some drawdowns, but it is very exciting and the productivity opportunity is very significant.
But you've seen your fair amount, your fair number of bubbles bursting. Is there anything that has your spidey sense up? And I'm referring to the fact that so many of the huge $100, $300 billion deals that have been struck, they all trace back to OpenAI. That's the load-bearing wall for so much of what's getting piled onto the markets. Are you telling your trading desks or any part of your business, just be careful here at all?
We have a deeply, deeply embedded risk management culture. And of course, I wake up every day spending 98% of my time worrying about things that probably have a 2% possibility of happening. And, I would say we're late cycle. We're late cycle. Now, by the way, as I said a few minutes ago, the cycle could go for quite some time, but we're late cycle. And so I think, risk management has to be at the core of what all market participants do. We have not had a credit cycle in 15 years. Credit spreads are historically tight. Equity multiples, especially around tech, are high. I'm excited about the opportunity, but I'm cautious because I think there's some exuberance in markets, and I just think we have to watch that carefully.
I bring up OpenAI because it just completed this transformation into the bifurcated system of both a nonprofit and the for-profit. Goldman Sachs was one of the lead bankers in working on that. It took a battalion of bankers and months, so you know what I'm talking about here.
It was one of the most unusual and interesting transactions. Our banking team that was led by, two Goldman Sachs superstars, Sam Britton and Jane Dunleavy, did an extraordinary job, working with teams of others. And they would describe it as one of the most interesting, complex things they've worked on in their career. So it's a landmark transaction, and it sets that company up to now operate. But that company has made significant capital commitments. It's got an incredible opportunity in front of it. No company has scaled individual consumers onto its platform faster by a long shot, and now they're going to have to work to deliver.
Does that set Goldman up to be the lead banker, the lead underwriter for an IPO?
We are proud of our relationship with OpenAI and so many of our other companies. Our job is to advise them along the way in the journey. Our business is a competitive business. I'm sure there'll be, if and when OpenAI ever does go public, I'm sure it'll be a very competitive process. And the one thing I promise you is we'll be in there competing to play a role in that transaction.
I mean, it'll be like the Hunger Games, but it'll be something to watch. I need to get to the Federal Reserve. Yesterday, Fed Chair Jay Powell said, as far as the December rate cut, he said not even close to deciding whether there will be yet another rate cut. So what do you see and what do you think should happen?
I wasn't surprised by Fed Chair Powell's comments. Not surprising to them. We have a government shutdown. It's gone on for a while. We don't have the data that we necessarily should have, all the data that we should have. The government shutdown, if it continues, is having an impact on growth. And so, it's a shame that we have government shutdowns, but we do. All these things contribute. So it's not surprising to me that he sent a message of a little bit more uncertainty at this moment.
Do you give him a good grade? The economy is strong, at least at the moment. Do you feel that he's handled this properly?
Yes, I mean, I think it's a very tough job, and I think that it doesn't mean that I agree with every single action, over the course of his tenure, but generally speaking, I think he's done a very good job, and I think we're in a relatively good place.
You just passed your 7-year anniversary of becoming CEO. In a way, I mean, the stock is at near record highs. In a way, you did survive a couple of near-death business experiences. You had some board members supposedly chattering about maybe we should rethink the position, and then an attempt to split the chairmanship with the CEO position. Is the revenge a little bit sweet here for you when you look at how well the stock has done and how the company's growing?
I'm in my 8th year, as you said. We as a leadership team made a bunch of decisions strategically around how we wanted to grow the firm. At the end of 2018 and 2019, we laid out a strategy at the very beginning of 2020, and we've been executing on that strategy for the last 5 years. And, what do you know? It was a good strategy, and the execution has delivered significant growth. We've taken the revenues of the firm from in the 30s to nearly 60 billion. We've grown the earnings very, very significantly. We've taken the market cap from 65, 70 billion to nearly 250 billion because we've grown the earnings so significantly. I think we've got a very good strategy. We're executing on it.
Okay, so at least you could say, told you so, my strategy is working.
I think it's better to keep working, do the things you believe in. We have fundamental values at the firm that we live by. We have a strategy that's clear. We're executing. I'm looking forward. I don't really look back and worry too much about, what's come. I think all these jobs are journeys. There are ups and downs. There are good days and bad days. But what really matters is what you deliver over time, what you deliver for your clients, because that's the core to our business, and how we ultimately deliver for shareholders, who really give us the privilege of serving our clients with the resources they allow us.
You thinking about the R word, retirement at all?
No, I'm not a retiring type. I've got a lot of energy. I'm running around the world to be with our people and our clients, and I'm energized by it. I mean, one of the great privileges I have in the job that I have is my ability to interact with so many smart, interesting people in the world and really, have a perspective on what's going on in the world, and that perspective, filters into the organization so that we can serve our clients better.
Oh, yeah, he is not leaving. He's going to see that OpenAI IPO through if he can just grab that one. And I really got that sense. Our thanks to David Solomon of Goldman Sachs.